All right, well, thank you very much, Eloise. Yeah, my name is Tim. I am the Director of Property Science Innovation at Rightmove. And what that really means is I get a chance to look through all the data that's flowing around Rightmove and try and pull out the insights that sort of help us understand what's going on with the market at the moment. And with that in mind, today, I'm going to talk about some of the market themes we're seeing, how home mover behavior is changing. So I think we're focusing today on sort of the behavior and so on of home movers, and then look at perhaps what's coming in the market next. So if we think back to over the last 3 years, we've faced, as far as I can see, challenges heaped upon challenges and changes following changes. Back in 2020 and 2021, we had lockdown, and then we had home working, we had homeschooling. If you had children of school age, you had home working out. We had changes as well to the nature of the property market, stamp duty changes, for example. And we thought, once we'd got through 2020 and through 2021, that 2022 might be a year that we return to a bit more normality. And perhaps we had anything but the sort. We had the emergence of hybrid working. We had the Great Resignation, and which led to the tightness in the labour market. The emergence of inflation. We obviously had the invasion of Ukraine and energy prices spiking. And then we had the Bank of England taking action that they had done at the very end of 2021 through 2022 by raising interest rates. And then we had at the end of the year, in September, leading into October, November, December, we had the mini budget and the various turmoil that we all felt towards the end of last year. And the beginning of this year, we've obviously had, perhaps because of all that, more focus than ever on interest rates, on the governor of the Bank of England, on swap rates. We've all become experts in swap rates over the last sort of 4 or 5 months, if not before that. And we're only days away, I think, now from the budget, which who knows what will be contained in that, which might send challenges or positive or otherwise through 2023. So lots and lots of change, lots and lots of challenges. What has that meant for the market so far? So a couple of key themes. I think what I've got here is the sales price year-on-year growth, going back to 2007 and up to our most recent sort of house price index. And so here we've got the average sales price changes and then rental. I want to focus in on the most recent period, the most sort of COVID period. And I suppose what you can see is we've hit record prices, record price growth in both the sales and the rental market during 2022. And very often we see sales prices moving and rental prices not moving at the same time. But actually most recently, particularly through 2021 and into 2022, we saw a rapid increase in the price of sales price of homes, as well as the prices increasing in the rental market. That pace of price growth has been changing a little bit, and we'll come on to that in a moment. When we see prices increase like that, it obviously has an impact on lots of things. Cost of living is increasing. We talked a little bit about inflation already. And the cost of your home on a monthly basis has also been increasing. If we think back here back to 2014, what we've done is we've taken the average price of a first-time buyer type property, so that's a 0, 1 and 2 bedroom property in our segmentation, and we've looked at what the cost of buying that home and servicing that mortgage might be if you had a 75% LTV mortgage or a 90% LTV mortgage, or at the variable rate at the time. We're using the Bank of England sort of published data sets for that. And we've also got the comparable rental price that you'd pay for a similar type of property at that point. So you can see back in sort of 2014, 2015, we're at the sort of 700, 800 pound mark for the 90% LTV mortgage, and the first time rental price was below that. And if you were lucky enough to have a 25% mortgage, 25% deposit, you'd be well below the rental price in terms of what your monthly outgoings would be. If you move to the post-COVID period, you can see that what we've seen is quite a significant and rapid increase in those costs. You've seen, as we've seen mortgage rates move up into the sort of 4s, 5s, 6s, and at some point people were concerned it might, be 7s and 8s. We've seen prices on a monthly basis for a mortgage significantly increase throughout 2022. It wasn't just the end of 2022, it was throughout 2022 we saw this. At the same time, we've seen rental prices increase as well. We are starting to see those prices come down a little bit from a mortgage perspective. We've seen the pace of price growth for the actual properties reduce, but we've also seen those mortgage rates fall. The average rate for an 85% LTV mortgage back in sort of October might have been just shy of 6%, is now below 5%, 4.8. And a 60% LTV mortgage, some of those are down in the 3s at the moment, 3.99 I think you can get. So there has been a reduction, which you can sort of see starting to come through in the costs there. But nonetheless, certainly an increase on where we were earlier on in 2022 and before. So that's what we're seeing from a cost perspective. And what has that done to demand? What have those themes that we just talked about throughout 2020, 21, 22, into 23, what has that done for demand? And when I talk about demand, I'm talking about inquirers, so people looking for their next home, contacting estate agents through our site by clicking on the button and sending an inquiry. So it's that hard indication of demand, and also phoning estate agents, letting agents, new homes developers. So it's a hard indication of demand. It's not sort of traffic on our site, that kind of thing. It's a hard indication of demand. And we're looking at individual inquirers. So that's what I'm talking about when I talk about demand. And just for reference, we're sort of a top 15 website in the country, one of the largest websites in the country, and we've got people spend about over 1 billion minutes on our site every month, at 1.6, 1.7 billion page views on our site a month. So there's a lot of activity that comes through into these kind of statistics. So what are they showing us? So that's what demand looks like for our first-time buyer segment, and that's what I've done here is I've indexed it off February 2019. So I think in general what we're seeing is we're heading back towards 2019 levels, and interestingly, I think we've been seeing that for some time. So all the way through 2021 and 2022, we've seen that level of demand slowly start to edge back towards 2019 levels. So I think there has been a really strong bounce back in demand, as you can see from 2020. So April 2020, as we came out of lockdown, lots of people wanted to change their home on the basis of wanting more space, wanting to move to more rural areas or coastal areas. Lots and lots of people wanted to change. And that has been continued through 2021, and that has been slowly but surely returning to more normal levels through 2022, coupled with those elements around affordability, which we looked at on the previous slide. So that's the first-time buyer demand. This is second stepper, so that's the next level up in terms of size of property. So your 3, 4 bedroom properties. Not excluding 4-bedroom detached, and so we didn't see the same jump in demand, but nonetheless we saw a strong jump in demand, and that's our top of the ladder. So our large properties are sort of 4-bedroom detached and 5-bedroom and beyond properties. So I think in all cases we've seen demand significantly increase, and we've seen it towards the end of last year, particularly after the mini budget in the final quarter. It did accelerate in its fall, but it has bounced back. And in all cases, we're above where we were at this point, February 2019. So about 10% above where we were at that point. Critically, I think we'll talk about where we are in comparison to when you look at demand per property, which I think is the next element one needs to consider with this. Because obviously the story through 2022 and 2021 has been a lack of stock, which has led to some of those really, in addition to this demand, which has led to some of those price increases. And those price increases, you can see here, this is the average year-on-year price increase for those segments that we're just looking at. And I suppose what you can see was those larger properties, despite the fact that demand went up more in the first-time buyer segment, actually it was matched by stock more effectively than the larger segments were. And that's why we saw them at some of those very, very strong price increases, up well above the sort of double digits into approaching 12%, some of those top of the ladder. But I think interestingly, we have been seeing that pace of growth of price slow down since the beginning of 2022. So it's not sort of the end of 2022 when we've seen this. We've seen that pace of growth slow. And just it is worth bearing in mind this is the pace of growth, so it's still growing, but that pace has been slowing. So we are now at the sort of 4 to 5% growth, depending on which segment you're looking at. Overall, on average, it's about 4% on our most recent house price index. So that's the sales market on a segment basis. It is again, as you can see, it's been quite different. Regionally, it's quite different as well. So you can see here that certain sectors, London, for example, regions haven't fared quite as well in terms of price growth. It haven't been quite as frenzied as some of the other markets. And when you start to combine segment and location, it really has been a different last few years, depending on where you are and what kind of property you're buying. And I think it will feel a little bit different right now as well. To give you an example, first-time buyer type properties in London over the pandemic period, they're up about 4 or 5% from where they were pre-pandemic. If you look at a top of the ladder, large property in Wales, they may be more like 20 to 30% up from where they were back in pre-pandemic levels. So it's been quite different depending on which segment you are and where you are. So that's what we've been seeing. On the rental side, it's a bit of a different story. By the same segments, I'll run through these a little quicker, having explained the sales side, because it's the same philosophy and same charts. But again, we're looking at demand here. And as you can see, the number of inquiries, index of February 2019, is still well above where we were at that point. And again, we've seen significant growth, perhaps a little bit differently to the sales market. It took a little bit longer to come through. So initially, we know that in the rental market, those towns and cities were perhaps less attractive because some of the benefits of a city, for example, had been removed by the first lockdown and subsequent lockdowns, social, cultural, work aspects. And so we saw demand take a little bit longer to sort of come back, but then it has come back in a sustained way through 2021 and particularly through 2022. And at the same time, stock has just simply not kept pace, and we'll show that a little bit later as well. And therefore, it's probably no surprise based on those charts that this is what's been happening with price. So the light blue line here being the first time buyer, average year-on-year price growth. You see, we actually even saw some falls in those early periods of as we came out of lockdown, as lots of stock was coming into the market, demand was taking time to pick up. But then obviously we've seen that accelerate very, very quickly through 2021, and we've seen double-digit price growth consistently, and it hasn't been slowing in the same way that we've seen the sales market easing through 2022. So it's remained very strong, and that's because demand's remained pretty consistently high, and stock has remained very, very low. And again, you'll see that it's quite different depending on where you are in the country. Particularly, it will have felt different in London in those early parts of the pandemic. But now in London, I think it's a very, very rapid market. Again, there's not enough stock. Lots of people are still looking to move as we come to grips with what hybrid working means. People are coming back to the city, and that's putting pressure on the market. And that's why we're seeing still some price growth in the double-digit space in some markets with some types of property. So I'll quickly now move on to a couple of elements around mover behavior before coming back to where next for price in the market. So I thought I'd quickly show you some thoughts around how people are searching. So we were really interested to think when we've been looking at these question of big moves, where are people moving from to? And when we look at inquirers who are sending leads on our site, they tell us where they are based in their lead form, so we know that the postcode of where people are based. and we know the postcode of where they're sending inquiries to. So we look at that in aggregate to understand sort of flows of demand, and how demand sort of what dynamics are we seeing around spread of demand, for example. So in this particular case, we were trying to understand, we've seen a little bit of an uptick in the distance people are inquiring, so longer distance it moves, sort of over 50 kilometers. That was a thing early on, but then it has stabilized. But one thing that has continued to change has been the area people search. We looked at this by looking at the spread of inquiries, where people send more than one inquiry. So we were looking at what's the spread of those properties. And then we were calculating the area created by that grid and had that changed. And in both sales and rent, we found that people are looking further afield than they previously were. Now, some of this might be in relation to pressures initially caused by cost. So with the speed of market moving, or it might be people actually wanting to find particular properties but not finding the areas they want, the price they want, so looking further afield. Also the fact there wasn't a lot of stock around in those early parts of 2020 and 2021 compared to the number of people looking. And it may be now around affordability and costs playing a role as well. But we've seen that area increase by 50 to 60 kilometers squared, which, to put it into perspective, which is why I've got those two little pictures on the bottom there, it's about 30 times Monaco or 1 times Manhattan in terms of an additional search area for people when they're sending inquiries. So it looks like in response to the market, in response to affordability constraints, in response to the amount of stock that's available, and also a stricter shortlist of key things people want in their properties. So people aren't compromising so much on the type of property they want. They look like they are willing to compromise on where. So that's definitely been something that we've observed. We've also been looking at where people are looking, at this point around, are people leaving cities? And we've talked about that flow of where people are inquiring from and to. So what we looked at here was in the sales market at the top and then the rental market at the bottom. We took the some of the major cities in the UK and considered where were people who are based in those cities, where were they sending inquiries to? So what proportion of those inquiries were actually leaving the city if they were currently based in the city? So what we found here is that if you look through the last 4 years and at the beginning, well, last 3 full years and then the beginning of this year, we did see that initially expand. So the proportion of people looking to leave the city definitely increased, but it's come back a little bit. And we think, as things have changed, if we've opened up, as a lot of people coming back to the office, perhaps that has changed a little bit. And maybe people are finding more opportunities within the city. Although it is early part of the year, so that might increase because there is some element of seasonality to that. The rental market looks quite different though. Firstly, it's not as many people that look to leave the city in rental, because we know they are drawn to the city for from a rental perspective. But interestingly, it's been consistently increasing pretty much across all cities and continues to increase for the first part of 2023. And perhaps again, that might well be a reaction to the pace that price has grown in cities. So people are looking for more affordable accommodation, perhaps out of the city. But the level of demand within the city remains very high. So in both these cases, that's definitely worth bearing in mind. It's just a proportion that we're looking at here. Lastly, what? So what are people looking for? So we've seen here that the way I look at this is there's a feature on Rightmove called keyword sort. So you can key into the property search on Rightmove. You can key a keyword that you want the properties that will be displayed to have in their description. So for example, you might want a garden as a key thing for you. So if you typed in garden, then you'll be shown properties that have that word in that advert. So we, for a while now, have been totting that up, what people are actually telling us they specifically want in their properties, and then ranking the ranking of those words and prevalence of those words. So I think it's really interesting what we found over the years. So firstly, in reaction to the pandemic, we found that people really wanted space. So we found in September 2021, we'd gone to acre had come out of nowhere into the top 5. But you'd also see there rural and land suddenly become words that people were looking for. And interestingly, as we move into February this year, acre has dropped down now to 3. Garden has come back in, views, and annex is still is now really important in garage as well. And I think that is perhaps because of the hybrid working element, people wanting to find a space for home working because they may be at home 1, 2, 3 days a week if they're able to be. So definitely a change, perhaps, but it's a little bit different to where we were back in September 21 and June 22. Rental market looks different. Firstly, we've seen the importance of pets. So we know that pets are really important to people. But for me, what's really interesting about this is bills included. So we know cost of living is a concern for many, and totally understandably, given the way bills have been increasing, and also obviously the cost of a mortgage or rental bills is increasing. So people are absolutely eagle-eyed and looking at costs. So and we've seen bills included come back into this top 5. It's number 2 behind pets. As I say, pets is normally kind of non-negotiable. If people have pets, it's very, very important to them. But bills included now are really, not many properties offer bills included. Not many landlords offer that, and understandably, and it's quite a difficult thing to offer. But it's really, I think, interesting that people are actually demanding that. So people are wanting certainty. People are wanting to manage their costs. It's a really key indicator to me of how people are feeling at the moment about their expenditure. And the last thing I'll mention on the what is green. So green terms are coming increasingly increasingly important to people. What we've looked at here is taking, for example, solar and heat pump. And if you think back to 2020, they were closer to 500 and in the thousands in terms of the ranking of words. In November, when I looked at this, they were at 76 and 157, and consistently every time I've gone back and looked, they've been going up the rankings. I think they're even higher when I had a quick glance at February. So we've seen that importance of green increase. I think one of the reasons is people are increasingly caring about the environmental impact of their homes. They are aware that rules will be coming down the track, particularly in the buy-to-let space around EPC ratings of C or above, and likely to be from 25 or 28, though that may be delayed. But also because there is a belief that it will save money, and I think that's front and center in people's minds at the moment. So just to conclude, I think we'll just look at what next and where might we be heading from a market perspective. And for this, the key thing I look at is the demand for property. So that gives me a level, an understanding of competition for property and the pressure that there might be around prices and where prices might move, therefore. Back in 2019, generally speaking, the heat of the country looked like this from a demand for property perspective. The redder the color, the more heat there is. By 2021, that was that when you saw before, when there were very high levels of demand. And you can see how some of those coastal regions, those rural regions, were really, really hot in February 2021. By February 2022, they'd become even hotter, particularly in those rural areas. But by the time we get to February 2023, a lot of that heat has cooled, and we've seen demand for property certainly cool throughout 2022, and that pressure around pushing prices into that double-digit growth isn't there at the moment. But interestingly, we'll come back to what it looks like compared to 2019 in a second, because I think that's critical. On the demand side and the rental side of things, demand for property, you'll see a similar story, really, really strong by 2021, even stronger by 2022. The scales are different between the sales and the rental market here, because the rental market actually demand for property was even higher, but then has not cooled as much as we've seen the sales market cool. But I think, and you can also perhaps see in here that there's been that return and that heat returning to some of those more city-based locations on the sales side of things, on the rental side of things. But I think what's really critical, and as we've been saying, we've been seeing things head back towards 2019 levels, and that's where we're comparing, because it's a bit more normal. We're still at this point well above where we were in the sales market in 2019. So we're about 34%, or we are 34% above where we were from a heat perspective in 2019. And that's because demand is actually a little higher than it was in 2019, and stock is about 25% below where it was in 2019, available stock. So there's still that pressure from a demand per property perspective, which whilst it's lower than it was throughout 2022, it's still higher than it was in a more normal market. So gives some support for pricing, although we do expect that level of price growth to reduce. On the rental side of things, it's still obviously well above, more than double where we were back in 2019, and that's because demand is still high and stock has not come to the market to meet that demand. So just to conclude, I think what we're seeing is the sales market has been heading back to 2019 levels over the past 12 months, and we had been expecting, we've been seeing that through 2022, and we still see that now. We have seen some positive signs in the early parts of 2023 around, as I say, demand's a little higher than it was back in 2019. Sales are going through, so they are about 11% below where they were in 2019, but that's better than it was at the beginning of the year when it was sort of 15% below where it was in 2019, and post-mini budget we're about 30% below where we were in 2019. So it's been trending in the right direction. I think the spring selling season is going to be really critical there. See how that's going. Not the same as in the rental market as we've been seeing. It still remains very, very competitive. There's a lot of pricing pressure in the sales market. That's what in the rental market. In terms of behaviours, we've seen home movers want what they actually want and what they're looking for. That has changed, but I think there's still time for that to actually settle. We're not sure quite where that will end up, how hybrid working whether we actually will have hybrid working, or whether that will go away as we return to the office. So I think that's still working out, and that's still causing people to want to move. And lastly, we expect the market to be easing throughout 2023. We think the sales market will be price will be down about 2% on new seller asking prices. That's our own metric, the house price index that we publish on a monthly basis, down about 2%, and that would be about 2% down from where we are right now. We're already about 2% down from where we were back in October at the peak of the market. And in the rental market, I think we'll ease from where we are. We've seen that a little bit already, but not significantly. So we're expecting prices to be 5%, 6%, 7% above where they were at the end of last year. We're still at the moment running at sort of closer to 10% above. So I think that will ease a little bit through the course of this year. But that's it in terms of an update. Hopefully that's been helpful. Do let me know if there are any follow-ups or questions, and I'll be able to follow up offline on some of those questions if you have any. Thank you very much.